All right, welcome back to YouTube. So we are going to take a deeper dive into kind of what's going on here and what we're seeing in the charts here since we've broken trend and kind of seeing a reversal, really just market wide. And we're going to take a kind of like a deeper dive into this because there's a few things that I would like to point out. Let's take a look here at where Doge is, and then we're going to take a look at some other market indicators. So what we had here initially is we had a rejection pretty much off of the 200, and this is when we see this historically, when we see Doge break above the 709 mark with conviction. Typically, in a video a few weeks ago, typically that's when we have that run to about 10 cent before we start seeing some major resistance here. But as we know, we've had some turns, kind of like with the Fed, and we've had a lot of people kind of believe that the market is has kind of like peaked just because of the rising rates as far as for like in home ownership and mortgages, and of course we don't have the government injecting those mortgage-backed securities anymore into the market, and seeing kind of like this stagnation really, and really it's a sideways trend in a lot of the bigger companies. So this kind of caused people to become a little bit more bearish. And ironically, this is something I was talking about in the group. That's it's a very rare position to take, especially in an election year, because 99% of the time in an election year, you'll see this, I won't say a bull run, but typically you'll see it'll be a green market, especially around Q4. And typically that makes it a little easier for the current president to get reelected. Um, then again, it's into a political video, but when if the market is stagnant and or red, it's very difficult for the sitting president to get reelected. They normally, okay, economy is a big focus point of um, really just the politics, and certainly around any of the debates that you're going to be in and stuff like that. It's hard to make a case for reelection if even if it's performed poorly previously, but if it's performing poorly at the time of the debates, it's an uphill battle for the sitting president. So typically, we'll see policies and all this kind of stuff that kind of comes out to kind of push the market to kind of keep it green, at least to get through that period. So this is very interesting the way that things are keeping up right now, because typically that's not the case. Typically you'll see a huge effort government wise to kind of keep the market green. But again, getting to that, so we have some trends here that's been some reversals, and we got a rejection off of the 200-day, which is this red line here, and we had we just kind of peaked our head above it, and then we got across to the downward side. So of course we had the downward cross again, and now we see the 14-day has in fact crossed the 72. Now, does that mean it will have a further dip? It could, but it won't be as violent as the 14 crossing back over the 200. The 14 and the 200 is, it goes without saying that that's a much more violent dip, and that's kind of why you can see this all this red right here. And so if you can possibly see another dip and get down here into like that sweet spot that we speak of, and this is where this sweet spot down here, anything below what is it? Like 5.99 6 cents. Typically, that's where you see the fastest bounce out of that zone. And you can kind of see here, we hit here before, we immediately bounce back up here again, bounce back up. All of these here, we had these kind of did like this little dance here, but typically it was exchanging red candle for green candle until we kind of got back closer to the line, and then the acquisition of Twitter. Down here, we had the flash crashes, and same thing here. Really, just the exchange green candle for red candle, and then you can see it got really choppy there because of the buying pressure that comes in on that zone. So we could have a test down into this zone here, and I'm going to explain why in a moment. Let's take a look here at shorts, and then we're going to go into the biggest catalyst as to why we can see a further dip. Now, of course, this is one of the things that we're talking about here, shorts. And the amount of shorts that came into Doge are also going to play, they play a huge role in everything, right? But the shorts that came in, this is something we looked at in our last video, and we said we have to kind of see how shorts respond, because when we have people take negative positions in the market, people go to their favorite asset to short. And for some people, since around 2020, that has been Dogecoin. And now we're dealing with the highest level of shorts, really, that we've seen since the beginning of the year. We haven't been around this level until since like January, and this is coming off of the peak of some of the higher levels of last year. So we haven't. This is, let's see here. Yeah, 'cause this is late December. This is early January. So, but yeah, some of the highest levels here. This is before we had that big sell off here to kind of come out of it. But this is certainly our 6 month high for sure. So we just kind of have to keep an eye on that, and we see that people are taking their negative positions, and they may not be crazy for doing so because there's a big indicator here saying that we could possibly see a further sell-off, and we're going to talk about that right now. So remember with Doge, how a moment ago I said that it won't be as violent because the 200-day is a much stronger average because we already crossed the 200-day and we're getting ready to cross the 14 and the 72-day. So it won't be as violent of a fall because the 72-day is a shorter term catalyst there, and it doesn't have a lot of the stabilization, the buying pressure, and the entry points for investors and or hedge funds and stuff like that to kind of come in and support it. So it won't be as violent of a fall. But with Bitcoin, what we're looking at here, which is the market indicator for institutional money, it's the opposite of that. So what we're looking at is a potential for a violent fall in Bitcoin. And we see the fall that we got. We got about a $5,000 fall from the 14-day crossing the 72. We're getting into the area now. We just crossed little, just barely, but we just crossed the 14-day, just crossed the 200-day moving average. So we can see a much more violent fall, possibly even retesting the 20 or jumping back into the teens again. And really here, if we look here, if we break below this 24, I'll say, yeah, I'll say 24 range, we're looking at a possible gap fill partially there. So this can drop us, I say, possibly to around 20,000, if not back into the teens again. So this can have an effect, or obviously a ripple effect overall on the market. So that's going to be something to kind of pay attention to. And I know people say, "Oh, Bitcoin can't drop that low," but I remember when I said Bitcoin was going to 20K and Doge was going to 6 cent, and people were calling me crazy and all that kind of stuff like that. So I'm not. I always report what I see in the charts, good or bad. You guys can make your decision. As far as if you want to align with that, or may come to your own conclusions. That's your business. But I report what I see in the charts, and I stand by that. So I do believe that it is highly probable that if we don't get a reversal, I say within the next day or so, above this 200-day, this is an indicator of what's to come. So just kind of keep that in mind if you're looking at acquisitions or coin count, stuff like that. Just kind of keep that in mind because you're going to have a great possibility that you're going to have an opportunity to acquire more at some better prices. So just kind of keep that in mind there. Looking at I don't really look at shorts for Bitcoin, but let's see. Yeah, they're not, because most Bitcoin swings enough money so that they can kind of just jump in and ride it either way. So not anything monumental like back in November, but or even compared to Doge. But the shorts are there, but even now they're down, so it's not a huge spike up, and even they're even lower now than they were in July. So it's not something I would say it's a huge contributing factor. But I think most people, even there, especially institutions, they're going to look for an opportunity to acquire more. So I don't think shorts are going to play that huge of a factor. But you can expect a possible sell-off there. And, just kind of when we have those sell-offs, just kind of know that Bitcoin does fill on both sides. So when you see something like this, even if you're just kind of expect a bull, right? Even right now, the Bitcoin is very infamous for doing you'll see this, this walk off of a cliff, this kind of like a flattening, and then it fills the bowl on the other side. So even here, you can see, even if we go down here, just kind of expect the bowl. So, if you're a Bitcoin advocate or something like that, in my opinion, you have an opportunity to kind of jump in and get some better prices there. But as always, do your own research, and let me know what you think is going to happen here, because we're kind of getting choppy here toward the elections as the debates and stuff are starting, and the indicators and stuff that we're looking at, seeing that we have potentially more pain to come. So let me know kind of how you interpret this in the comment section. I appreciate all of you. Thank you guys for tuning in, and I will see you guys in the next video.